Hi everyone, welcome to episode 5 of the Startup Playbook podcast. My name is Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and advice that they have to current and future entrepreneurs. In this episode, I interview Paul Naphtali, co-founder of Rampersand Venture Capital, a VC firm that recently closed their second fund, raising $50 million to invest in early-stage startup founders. In this episode, Paul shares when and how to contact VCs, the common ingredient that he sees in successful founders, the Rampersand investment process, and what the biggest turnoffs are for investors. It's always insightful to hear what the other side of the table looks for. I really enjoyed this interview, and I hope that it helps some of you find the right investors for your startups. Without further ado, here is my conversation with Paul. Hi Paul, welcome to the Startup Playbook podcast.
Good to be here. Thanks, Rohit.
Great, thanks. So, obviously you're best known for founding Rampersand Venture Capital firm, which recently launched a new $50 million fund. But just for a bit of context on you, can you talk a little bit about your background and how you got involved in the space to begin with?
Yeah, sure. So my background is from the strategic communications and PR and marketing side of tech, where I sort of first came into tech in the late 90s in Melbourne, during the .com1 boom, and really got the bug and ended up spending a lot of time working with lots of different startups here initially and then in Europe before moving to Silicon Valley. I was head of marketing for a voice over IP startup backed by one of the big Silicon Valley funds, and had a really good outcome with that business and just learned an immense amount around the sort of founder journey and the startup journey and raising money and growing, and was really fortunate to meet a bunch of amazing people and had a series of roles with different startups, all on the marketing communication side. Was involved with a couple of businesses we sold to Facebook, a few businesses to large telcos, a few failures that I don't talk about quite as much, and just learned an immense amount. And when I came back to Australia in about 2010, met up with a guy called Jim Cassidy, and we saw a great opportunity in Australia to back great founders and help them grow, really built upon our experience with helping founders around the world grow, and understanding that journey and putting a structure together that was great for investors because they got exposure to some of the best businesses in the country. And we built Rampersand on the vision of saying, if we can create wealth or more wealth for our investors and help create a generation of successful entrepreneurs, then we can build an ecosystem here. And we think that in 2013 when we launched Rampersand, there's a really early stage ecosystem. We're really excited with how that's grown over the last 3 years. We think there's a lot more work to do in supporting great founders achieve their vision.
Sure. So on that, what are some of the changes that you've seen since Rampersand launched its first fund in 2013 to what it's like now?
There's two fundamental shifts in the market or growth areas in the market. The first is we're seeing from the investor side and from the founder side. From the investor side, there's strong growth in the appetite for wealthy Australians and experienced Australians to diversify their portfolio and back founders. I think the entrepreneurial, the ability to back entrepreneurs has been fairly difficult in Australia historically. It's been undereducated, understructured, and generally there is now an understanding that supporting innovation, some kind of exposure to risk, early stage risk, is a sensible part of a portfolio. So I think that's partly driven by lack of returns in other portfolio investment classes, and also general acceptance that we as a country can produce great startups, and if we're going to be a wealthy country going forward, we need to back those startups. Our next generation of wealth is not going to come from digging shit out of the ground. It's going to come from backing brains, and we've got really good brains in this country, and we should get behind it. So partly is about the returns, partly is about the good of the country. That's on the investor side. Raising a considerably bigger fund second time around is a lot easier. Partly we've got a great track record, but partly the market has grown. And the supply of good founders in Australia generally has really grown through the roof. The number of quality founders that we see today is between 5 and 10x what we saw 3 years ago. And that's really exciting. It's both the quantum, the number of people, but also the quality and understanding and the vision, and people who are building great tech and thinking really big. And I think probably 3 years ago, people were a bit ashamed to come in and tell us that they had this big vision. And now, if you sort of don't come in with a big vision, you're kind of a bit the other way around. So it's they're the two big growth areas.
Sure. What does a quality founder look like to you?
What a great question. Well, you have to look at our portfolio and look at all those founders. Look, people come in all shapes and sizes, and really great founders are attacking a big problem, a problem they understand, that they've built a credible solution for, and actually understand how to start building a business. So people who, in the olden days, when I say olden days, up until the last couple of years, what's really grown is the people who are addressing big problems. There was a bit of a phenomenon in Australia and a lot of accusation that founders were building solutions to problems that didn't exist. And that, I think, has faded really considerably, and now we're attacking big problems. Quality founders have an understanding that it takes more than money to build a company. It takes good people. Tech businesses are people businesses fundamentally, and I should say, I know there are people listening to this that aren't in tech. We're very focused on tech, so what I'm talking about is within the tech context. Building a team, a board, advisory boards, success is all around getting great people around a business. So great founders are people who understand how to sort through a lot of that noise and get good people around them, and to grow and have a commercial element to what they're trying to achieve. One of the other big shifts we're seeing, probably Australia has a somewhat dark history of producing great tech and not commercialising it, and that's radically shifted over the past 5 or 10 years, where the ability to actually commercialise tech from Australia, even if it's a small market as we are, to sort of think bigger and international has grown a lot. So big problems, an understanding of how to grow a business in a commercial way, and how to attract good talent around you in all forms are the makeup of a starting position for a good founder.
Sure. Do you think anything specifically has instigated the high number of quality entrepreneurs that you're seeing?
I think about this a lot. Not really. I think as always, there's a confluence of things. Success breeds success, and as we've had more successful tech businesses that have come, I think as a convergence of a bunch of things, there's an international awareness that you can build great companies from anywhere, and you can play in a global space. Does that mean you don't have to go into Asia or US or Europe to find your customers? No, it doesn't. It means you can build stuff from anywhere, including Australia. I think our inferiority complex has started to fade a little bit. And as people are successful and come back into this market and recycle that success, the pie grows. We should be realistic. We're a long way behind a lot of the international markets, and a lot of metrics are actually slipping. So as bullish as I am about the Australian market, we've got a hell of a long way to go. I think education is still lagging. There's things out of government policy that we've started to move in the right direction, but a lot more to be done. A lot more around talent, a lot more around incentives. But there's no one factor that has created the growth in the ecosystem. I think more broadly, there's awareness of the notion of an ecosystem. When I first came back from the Valley, from Silicon Valley a few years ago, I talked about ecosystem and people thought I was an absolute wanker. And now you can't walk for people talking about ecosystem. And yes, I might still be a wanker, and some of those people might be as well. But we talk about this notion of it takes a village to raise a startup and build an ecosystem, and that good people paying it forward, coming into the market with appetite and intent, is really what's growing it. As I said, there's a lot more.
Sure.
There's a lot more to be done.
So I guess looking at Rampersand specifically, you're sort of best known for, or I guess your main point of difference is the sales, PR, marketing aspect that you bring to startups. So for you, are you looking for startups that have a solid product and don't really have an understanding in those areas and are looking to lean on you for that sort of expertise? Or are you looking for someone with I guess who your expertise and experience can kind of help accelerate that further?
It's a real balance, and what we found when we first launched is a whole lot of very tech focused founders came to us and said, "Oh, thank God you're here. We're really shit at sales and marketing," and that's not a great proposition to us. We want to back teams that will be successful anyway and help hyper extend that success, whether that's faster or larger or more sensible, and overcome some of the obstacles along the way in an intelligent way. So we have obviously a lot of expertise around the sales, marketing and PR and comms. We have great international networks, we have great domestic networks. What we're looking for with founders is really going back to what I said before about their big vision and the understanding that they want support. We can give a lot of advisory support around some of the structures for success, some of the structures for growth, whether that's sales, marketing and comms, or whether that's structuring M&A, or making sure that they're doing good corporate deals, or building a distribution channel network, building there's the other side to our partnership around sort of compliance and structures and internal management and things like that. So we're really not looking for founders to come to us and say, hey, can you do the hard work? Yep. We're looking for founders to come to us and say, hey, you've got a huge vision. We know there's going to be challenges along the way. We want people who've been through that journey who can help us overcome some of those barriers and be a good sounding board, a good advisor, and has a depth of experience around certain things. And we co-invest. This is very much, building a startup is a relationship game. So we co-invest with very complementary investors. So we might have long strength on sales, marketing, comms. They might have deeper tech experience, or they might have domain expertise, or whatever it is. So we're looking for that mindset from a founder that says, I want to attract great people around me. And yes, we need money, but it's around attracting great people who can help the journey and can work together. There has to be a huge degree of optimism. That person has to see a tough challenge and believe against all odds they can overcome it. And there has to be a massive amount of paranoia as well. Because unfettered optimism leads to big problems. If you're super paranoid, without that optimism, you don't get off your ass and do something. So that's the other blend that we're looking for.
Sure. And obviously, I know from your website, you're obviously very easy to contact. You've got all of the contact details available. Mm-hmm. For other startup founders, a lot of questions that I get asked are, how do I reach out to investors and those sort of things? What recommendation do you have in terms of the best ways of reaching out, and at what stage startup founders should be looking to build those relationships with investors?
Yeah, it's always horses for courses. We know a lot of investors, for very sensible reasons, will only be contactable by an introduction. They won't take it cold. We're happy to take it cold. Our strong preference is if you can come through someone in our network, then it's best. If you can't, and it's reasonable if you can't, then the best thing to do is be very clear about who you are, what you want. The approaches that we get saying, can I call you, can I text you, can I come and see you, without context, are really difficult to deal with. And that's not just us sort of being, your time as a founder is as important as our time. There's no, or arguably more so. So we don't want to waste anyone's time. And so the more specific you can be about, telling us about yourself and what you want and where you're at, the more chance of actually getting a meaningful conversation going. And we're really motivated to get a steady stream of founders funded. And if you're not the right fit for us, there's likelihood that we'll know someone who is. But if we don't have that context, then it's very hard to help. Mm-hmm. So, make contact. Our contact details are on the website. It's usually best to email rather than call. Our numbers are on there, so feel free. But chances of success through that channel are going to be muted. But send us an email telling us as much as you feel comfortable about yourself and what you want, and we'll try and help you, whether that's through a meeting or whether that's with us or someone else.
Sure. And what does that process look like for you as well? So from someone contacting you to you taking that meeting to you sort of doing your due diligence and essentially investing in the opportunity, what's that process, and what do you look for at the different stages of that process?
This is probably we love meeting startups early. We love meeting them, but when they're too early for us to invest in, which might sound a bit frustrating for if you're a founder sitting there going, why would I waste my time? Raising money is hard, and it's time consuming for you, and it's distracting for you to want to build the business, but it is an investment in a relationship. So if we can meet and take a little bit of time from each other early and start to understand what your vision is, and then see how you evolve against that vision. There's a thesis called Investing in Lines, Not Dots. if you come in at the right stage for investment, we only have a single data point on you, and sometimes that's really compelling, and we'll work pretty hard to understand you quickly and invest into your business quickly. If you come to us earlier and we can see how you overcome the inevitable challenges and build that relationship, you can see how we can support you, and we can see how you evolve. Then once you reach that point where investment is within our mandate, stage-wise, and becomes a very easy check to write. And certainly some of our best investments have come when we've met a company, sometimes as long as 12 or 15 months before they're ready for our investment. We've been able to build that relationship, and the due diligence process is really achieved over time rather than in really intensive stage. That actually becomes more manageable for the founder at that point of time. They don't have to come out of their business, as often happens, for 6 or 8 weeks or even longer as they try to raise money. You can keep running your business and keep us informed along the way. One thing I would recommend, we're seeing a lot more these days, is we get a lot of emails titled "Dear Future Investor," and people keep us informed. And I'm really supportive of that. That's a great thing to do. So come and introduce yourself at the time when you feel ready and you've got a good story, and just expose what you're thinking. We know that the journey is hard, and we know that there's many a slip along the way, and how you overcome those challenges is often more important than the vision that you've come in with. So I would encourage you to get in touch relatively early in your journey and start to build that relationship without taking too much time. So that's sort of one profile. When you come in at the point where you're ready for an investment, then there's a little bit more of an intensive work to be done. We're not one of those funds that says come in and at the end of a 2-hour meeting we'll write you a check. We don't think that's fair for any party. We don't think it's fair for you as the founder. You've got to know what you're getting. So there is just a relationship build, but you try and do that as efficiently as possible. And now that I've been sitting in this seat for 3 years, I sat on the other side of the fence for a lot longer than that. So we feel the pain, and we've got to try and make it as efficient as possible, whilst knowing that you've got to know what you're buying from both sides.
Sure. So, obviously looking at your portfolio, you've got everything from marketplaces to fintech to wearable technology. What was it about those particular ideas or founders or the way that relationship was built that really sort of stood out to you that you had to put money in?
There was one commonality across the portfolio: outstanding founders. Full stop. These were people who we felt really understood the problem they were addressing. That the problem was genuine and large, and they had a unique way of both looking at that problem and executing against that vision. So whether that was deep domain expertise or an interesting insight or an ability to commercialise that software or hardware vision. So where the criteria for us is that they're in a space that we can understand, that means in tech, not in green or bio or medical devices, because not only can we not understand it, we can't help you as a founder, and our core thing is to be here to help you as a founder. The similarity between the commonality across the portfolio is just that amazing people, and typically amazing people means amazing teams. A sole founder is much harder to back because there's a lot of risk in one person, and it's a really lonely journey. And so having people around you as the founder, around your business, who can complement your skills is really important.
Sure. And are there any, so on the flip side, are there any red flags that you see that going through that process, you might sort of be really interested in the idea or the founder, and there are things that prevent you from taking that further?
Oh, there's a lot. We invest. Just to be clear, we invest in just under 1 in 100 companies we see. So the strike rate's not great, and the reason for that is sometimes because one of these things that I'll try and articulate what they might be is we don't like what we see in the business, but more often than not, it's just not a match. We see it's mutual. So. The biggest turn off is people who can't and won't listen, who don't have a collaborative, the God complex. We want really optimistic, really proud, really ambitious, erring on arrogant kind of people, because they change the world. We want to back people who change the world. But people who change the world who think they can do it all on their own are really difficult to support.
Sure. So it's about that balance between the two.
Absolutely. Don't be shy don't feel that you shouldn't back your own vision, but equally don't think there's a sort of something of a me and God complex that can happen. So only me and God can really understand this. So the rest of you plebs just have to get the joys of trailing in my footsteps. And that can be quite compelling, but it's also quite challenging from our thesis to be able to help those people.
Sure. Something that you mentioned a little bit earlier was the commonality that the startup founders had that you've invested in have a really strong understanding of their market. Do you think it's as important for someone who may not be a customer but still have an understanding of their market? Do you think that or deep experience of their market?
Look, I think there's a subtlety there. It's a deep insight into the problem, and then there's understanding the market. And they're related but not necessarily the same thing. So understanding the market has the connotations of actually knowing exactly what the channel is and what the mix of reaching these people are and what their buying decisions are. And there's a whole lot of shit you just got to figure out as you go along. But actually not understanding or having empathy for the problem is a really difficult starting point. If people sort of think they can sit around and say, I'm going to try and disrupt an industry or enhance a solution in an industry they just don't know the first thing about, there's a very, very steep learning curve, and some people can do it and most people can't. If you can understand the environment and the problem, but you can't actually, you still got to figure out your go-to-market strategy and your packaging, some of your language and your channel or some of it. That's okay. That's normal growth of a business, but an informed starting point is usually really important.
Sure. And with the new $50 million fund that you now have, what's the main sort of focus for you with obviously it's almost a 10-time multiple on what the first fund was. Is there a shift in focus at all? Are you looking to invest in more startups? Is there a particular strategy that's involved with that? Or
we're going to do what we suggest to other people, which is stick with what they know best. Yeah. What we think we're pretty good at, and we're starting to get some evidence behind it, is good at backing early stage businesses. So we're going to keep doing that. We're going to try and find and invest in sort of, around about 15 Aussie startups that have got into market and looking to grow across any sector within tech, as long as we can understand it and they're great people. So what having a bigger fund allows us to do is continue to invest in those companies for longer, where it makes sense for us and for the company to do that. So we're going to stick to our knitting. The first fund was pretty small and really gave us an opportunity to show that we could find some great founders, and we're beyond delighted that we've been able to do that, and we want to keep doing more of that.
Sure. And I guess coming back to the ecosystem as a whole, what are some of the things that you think can be improved in terms of the relationships between founders and investors?
I think there's... That's a great question. But there are a number of categories there. I think firstly, removing the stigma or this idea that there's a barrier between the two. This is not, and that it's a weighted market. There sort of seems to be the sense that startups come in cap in hand wanting money. From our side, we want to see the best companies, and if you're the best company, we want to see you. So don't ever feel like there's a weight of power, a balance of power against you, the founder. The founder holds the keys. If we were amazing founders, we'd be out there doing it ourselves. What we're really good at is backing great founders, and we've got to find those people. So we're as desperate for you as you are for the money. That's number one. Secondly, he's having just said you're desperate for the money, be desperate for the people, be desperate for people who can help you achieve your journey. And so starting to educate, this is not, we have money, but that's just a conduit for some other things. So remove the focus on cash. I think there are a lot of groups that are massively underrepresented within the ecosystem on both sides of the fence, and obviously there's a lot of talk about women, but also ethnic diversity, all kinds of diversity issues. There's a lot of research that talks about a lack of female founders coming into venture capital and pitching for money. There's also a lot of data that says when women lead businesses, they're more successful on average than men. So we've got to address that. And we just launched recently a female founder fast track, which is to say, let's remove the barriers. When you come into Rampersand, more likely than not, the first person you'll meet is going to be a woman. We've got a lot of policies in place around making sure that we can try and address that balance and make this an environment that's actually founder-friendly, welcoming, non-confrontational, very collaborative, because that's reflective of both of how we'll be post-investment, so it should be the same pre-investment. We need a lot more money in the ecosystem. There's still radical underfunding at a whole bunch of stages. It's great that there's a growth in number of funds. From our perspective, we don't see that as competition. We see that as the opportunity to co-invest with great people and put more great people around great founders for success. And the more we can go through a generation of success, the more sustainable this ecosystem will be.
Great. And over the next 5 to 10 years, what are some of the things that are really sort of exciting you? Are there particular markets that you personally are really interested in or think have a lot of potential?
Oh, there's loads. The question for us? There are some sort of global tech trends. Security and virtual or augmented reality, artificial intelligence, real-time communications. There's a whole lot of business process optimization still to be done. Robotics. The list is endless as to what's really exciting. The world in 10 years will be unrecognisable from today. I guess part of our job is to try and figure out what those things will be. Our thesis in Australia is we don't yet know what our specialisation is going to be or what our role is within the global ecosystem. Fintech is clearly somewhere we have some advantages structurally as a nation, but whether there's a depth of quality companies coming out of Australia at a global level, there's a lot, but we're yet to be sure. So we don't go hunting around certain technologies. We sort of try let's meet as many great founders as we can, and if they're in areas that are interesting, let's back them.
Sure. Is there, just on that, is there a balance for you between, having an opportunity? So assume we've got two really great co-founders, and two really great founders, you can only invest in one. I don't know if you have that same problem now with the new fund, but you can only invest in one, and one, has a lot of potential in the future, but the market maybe the timing isn't quite right. Versus something that is more replicable but has a higher upside now. Do you have a preference between the two?
We try and stay away from philosophical preferences and back great people. So look, it depends. And if the companies that come to us are addressing an existing market that's very, very clear, the chances are they've probably missed it. Yeah. That there are more established players already addressing it, and they're going to find they're playing catch up. So it's really about understanding the thesis of what the art of the possible is within that vision, and can we get behind that? Do we think that the global trend is sort of supportive or anti? What's the opportunity for them being disrupted? If the payoff for us, the payoff is 5 to 10 years later. And so that's the point at which you want them to have a great business. If their vision supports it, then great. As I said, if they're sort of if they're following a move that's already become evident and is clear, the question has to be, where are they in the time frame to address that? Who's ahead of them and why will they be able to catch up? They may well have missed the boat already.
Sure. So what's the best way for someone to find out more about Rampersand or get in touch with you or someone from the team?
Rampersand.vc online. All our details are on there. Do LinkedIn stalk us, find out the network. Don't send a LinkedIn invitation if we haven't met. It's very hard to respond to that. But typically the world is pretty small. Find a mutual connection, or as I said before, contact us directly. We'll gladly have a chat.
Perfect. Thanks a lot for your time and your insights, Paul.
Thank you. Good to chat.
Hi everyone, thanks for listening to episode 5 of the Startup Playbook podcast. As always, you can find the show notes of my interview with Paul along with a curated list of tools and resources for startup founders at startupplaybook.co. Don't forget to subscribe to stay up to date with the latest episodes. In the next episode, I interviewed James and Matt from M5859 Studios. They have a strong track record of building successful and scalable apps, including the App of the Year for 2012, which went number 1 in 22 countries and had over 500,000 downloads. If you're looking for ways to get more exposure for your app or product, you need to listen to my interview with James and Matt. If you also listened to episode 2, you would have noticed that both Shelley and Paul mentioned that as investors, they're looking for founders that solve big problems. So my question to you for the day is, what is your addressable market? i.e., how big is the opportunity and the problem that your business is trying to solve? You can respond via Snapchat or Instagram at Startup Playbook, on Twitter at Playbook Startup, or comment if you're listening on Facebook or YouTube. Once again, thank you for listening, and I'll see you at the next episode.